Let's bring in Scott Bauer, CEO of Prosper Trading Academy. What do you think, Scott? I mean, this is kind of a weird one. They're obviously losing a pretty big brand for them, but they're doing it by choice. And the stock has been bouncing up off that COVID low, almost down to single digits.
Weird one is right, Oliver, and I labeled it, quite frankly, as a crapshoot. I don't like trading in a scenario where, I think technicals and fundamentals are just anything can happen, and it is a crapshoot. And there's so much going on with Gap specific and obviously the whole retail sector. We've seen a mixed bag of results so far. When you shop at Gap, you know that you can always get something at 20% off, most times 40% off. So I'm just kind of wondering, going into the holiday season here, if they do have excess inventory, which many of the other retailers have, are you going to start getting things at 70, 80% off? Which is, in my opinion, very, very plausible, very possible with Gap. So again, I think this is a total crapshoot. And the way that I'm playing this is I'm actually buying both a put and a call. I'm going out to regular December expiration. So I've got about a month. I'm buying the 10 put and the 14 call, about 70 cents or so, somewhere in that range, and just looking for a big move. If we don't get the move, that's what I can lose. That's what I risk. But again, I look at this and close your eyes, flip a coin. I think this thing can move pretty considerably in either direction.
I like that. Gap is definitely shown an ability to, wink, wink, gap around on earnings. Not shy of volatility for sure. And then when you're doing this trade, Scott, how do you think about the strikes? Because when I try and do these trades, it feels like I'm always just spending like through the nose.
Yeah, when you buy a strangle like this, especially going into earnings, right? It's going to be expensive from a volatility standpoint because we know option prices are inflated. But when I look at the strike, you guys were just talking about the expected move built in, about a 12% move or so. That's on, today's report, or tomorrow, what we're going to see tomorrow. So I'm giving it some extra time, and I'm expanding that a little bit. I'm looking at about a 15% move or so going out the extra month. So that's the way I'm looking at it. Sure, you could maybe do tighter strikes, which would cost you a little more. You could do wider strikes, which would cost you a little less. I'm really just looking at it as, what's my balance? What's the pain point for me, right? I know I can lose 70 cents, right? If this thing doesn't move, I can lose 70 cents. What is that number that I am comfortable losing? And then I kind of go from there.
Okay. All right. Nice. So looking for a big swing in Gap. And right now we're up about 2% today. So, I mean, it's a kind of a chunky move in a down market. Does that tell us anything about which way this is going to go?
I don't think so at all. Okay. It's all going to be based on what they say. I don't even know that Yeezy is going to play into, or Yee, whatever his name is. I don't know that that's even going to play into it, other than projections, which I think have already been accounted for. So I think it's going to come down to the inventory issue. And if they have a massive amount of inventory that they still have to move, and you start to see 40, 50, 60, 70% off going into the holiday season, that's going to be a bad thing.
Yeah.
But if they don't say that, then you've got that upside. That's why I think this is a crapshoot.
I think so too. Bad thing for the stock if they got to clear out that inventory. Man, great thing for my T-shirt.
Exactly. Totally.
Sweats collection, though. Holy cow. Gap 30, 40% off. That's like $8 a shirt.
Load them up.
Baby. All right.
Load them up.
Yeah, exactly. All right. Thanks, Scott Bauer, CEO, Prosper Trading Academy.